QuickBooks Enterprise 2021. Two businesses and personal bookkeeping in one QuickBooks file using classes, sales receipt, and classes. It's time to boldly account where no accountant has accounted before with QuickBooks Enterprise 2021. Here we are in our practice file. We currently have our open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. In prior presentations, we set up our practice file. We set up classes within it so that we could be tracking two different locations or two different business, as well as the personal file in one QuickBooks file. We've been thinking about the data input now with regards to the revenue cycle, or with regards to eventually the deposit side of things. And we were thinking about that in terms of two methods in your mind. You're thinking cash method, accrual method, not so much driven by just deciding to be on a cash method or accrual method, but rather by it's being kind of decided for us by the type of industry we are in. So we started off with a cash-based industry. For example, if you have like gig work or something like that, you're being paid directly by an app, or it might be going through PayPal or something. Then you probably can record the deposits when you receive the payment, and can not only be on a cash basis method, but possibly even on a method where you're dependent on the bank statements in order to record all of your data with regards to the deposit side of things for it. Meaning you wait till something clears the bank, possibly using the bank feeds, and then apply out the deposit that you had to the revenue account related to that work. So that's a cash method, and it's even a step further from a cash method, meaning we're constructing our books from the bank statement instead of checking our books to the bank statement. So we also talked about a full service kind of cycle here, and that would be one in which we're an accountant, let's say, or a lawyer, some kind of service company where we basically have to do the work, then bill the client, running through accounts receivable with the use of an invoice. Then we're going to receive the payments, then we're going to record the deposit. So we talked about that line and how we can kind of separate out the accounts receivable between our two businesses if we need to. Now, the other one that's kind of in between is we might have a situation where we are recording the create sales receipt. Now, the create sales receipt is basically a cash method kind of form as well, but it's a little bit different than the first system we looked at, which is not only a cash method, but we're dependent on the bank statements to create our books. So in other words, if you're talking gig work or something like that, you're probably not creating the sales receipts or entering with the sales receipts. You may just be waiting till something clears the bank, and then you're recording the revenue at that point in time, and that should work fine. However, if you're at a system where you do work and you collect money at the same point in time, say you're thinking about anything where you have like a cash register in front of you or something like that, then you're going to be recording the create sales receipts. The reason that's different is even though you're receiving the cash at the same time you're providing the work, you're recording it in the books before it clears the banks. We're recording it in the books when we collect the money, even though we have not yet deposited it into the bank, as opposed to waiting till something clears the bank and then recording it in your books. So if you're getting paid by an app or something like that, then you're probably going to wait till the electronic transfer possibly hits the bank or hits your bank account in some way, or your PayPal account or something like that, then record the transaction. If, on the other hand, you're collecting cash or something like that at the point in time that you make the sale in like a restaurant or a store, then you're going to be recording the cash that you received or whatever payment you received at the point in time that you received it. And then when it clears the bank, you're going to be matching it to the bank. You're going to be reconciling to the bank, either with the bank feeds matching to the sales receipts, or when you do the bank reconciliation, you'll be matching that out. So when we think about the create sales receipt, then it depends on the types of businesses that we have. These would be types of businesses where, like a restaurant, where we're going to get paid at the same point in time that we do the work, and then we're going to take that money and deposit it into the bank in some way, shape, or form, and then verify that it has been deposited along with the bank reconciliation or bank feeds. Now, to put information into the sales receipt, it's going to be very similar to the invoice. So note that if you have a type of business like a restaurant or something like that, and you're putting the sales receipt as your primary data input for the customers for that business, and your other business, say, is gig work or something like that, then you can record the gig work basically by waiting till it clears the bank and record the deposit. And then you can use the sales receipt forms in essence to be recording the transactions for your business. Or you might have one business that's basically recording items all the way through the receivable cycle, the other business which is like a restaurant where you get paid at the same point in time, and you might be dividing these two items up. So let's open up a sales receipt type of form. So it looks similar to an invoice here, except that we're going to get the money at the same point in time. Notice that we have this drop down. This is the item that's going into undeposited funds. That is the default. Now you have the option here to choose like the checking account if you so choose, but the default will be going to undeposited funds, and you will not even have this screen unless you turn on the options to do so. That option can be found in the edit drop down, preferences at the bottom. We want to go back up to the accounting tab up top, and then, I'm sorry, not the accounting tab, the payments tab, payments on the left, and then the company preferences at the right. This will automatically be checked off by default, so you have to uncheck it if you want to see that screen, and therefore that'll give you the flexibility, closing this back out, to then deposit it directly into the checking account if you would like. So then I'm going to select a customer. Let's select a customer for B1. So I'm going to say customer 7 for B1. And this is for the first business that we're going to basically have. And then I'm going to say this is going to be an E. And I'll check the item, which is going to be an item for B1 that we will be selling. And let's say this is 5500 in the amount. You are changing your, that's okay. I'm going to say okay. Now notice here that because we don't have an actual account here and the account is driving the classes, no class has been assigned. The class would need to be manually assigned in this method. I'm going to go up top and say assign the class to B1. You could set up your method to assign it rather than by name. You can assign it by item, and that might pick up the class for the revenue side of things, but that could make it more, there's pros and cons to choose what the default class setting will be. So if we label the item here, we put in the item name that it's going to be B1 or something like that, it should be fairly easy for us to choose which class it will go into. If we miss the class, if we don't put it into a class, we'll get a message saying, hey, you didn't assign a class to it. And even if we ignore that, when we see it on the income statement, we can basically reassign it because it'll be an unclassified. So we'll take a look at an example of that in the future. So note what's going to happen here. This is going to be increasing undeposited funds on the balance sheet, and then we're going to have to deposit it the other side. Then it's going to go to a revenue account, which is driven by the item down here. Now I'm going to change the date up top to 02/15/21, let's say 02/15/21. That'll work. And then I'm going to save it and close it, and then we'll check it out. Saving it, closing it, and closing it again, and then checking it out by going to the reports drop down. Let's go to the company and financial. Let's take a look at the balance sheet by class. Balance sheet by class. Changing the dates, I'm going to go to the customize area so we can drill down on those dates from 01/01/21 to 12/31/21, January to December 2021, and okay. So here is our information. Undeposited funds has gone up. It's going up by the B1 account. Notice that we only have one account. We don't have two accounts for undeposited funds. We pretty much have to do that because this is kind of like a preset account by QuickBooks to be that go-between before we make the deposit here. So it'll break it out by class, but we don't have that double check with the two accounts that we would be working with as we did with the accounts receivable. If I go to the reports drop down again, go to the company and financial, take a look at the profit and loss, but we want to see the profit and loss by class. Changing the dates up top from 01/01/21 to 12/31/21. We then have in our sales here for B1, we should have in sales now. There it is. There is our item for the sales receipt. It's shown as the sales receipt. It is now being applied to the proper class, B1 being that class. So let's go back on over to the home page now, and then we would have to record the deposit here. Now you might say, why wouldn't I just deposit it into the checking account when we record the sales receipt? Now, especially if you have sales receipts, if you work at something like a restaurant, then it's quite likely that you're going to get payments of multiple things, like multiple payments of cash and whatnot. And you might have to group credit cards into some type of grouping that will be different than they were on individual sales items. And then when you deposit them into the bank, they'll be in a different grouping. And you want to make sure that you group them in the same way that they will be on the bank statement so that you can reconcile the bank statement. So many times when people use sales receipts, if they're working in a store, anywhere where there's a cash register, anywhere where they're physically collecting cash, as well as other payments like credit card payments, then you kind of have to use that undeposited funds so that you can group the group the deposits here. So here we only have one deposit, and if you only have one deposit at a time and you put it directly into your checking account, every time you make a sale, you put that one sale into the checking account one at a time, one deposit at a time, then you don't need this step. But if you're grouping your deposits together, then you need this step or you won't be able to reconcile as easily. You'll have to, it'll be a pain to reconcile. Reconciling should be easy. So I'm going to go ahead and check that off then. And we're going to say, okay, it's going to be going into our checking account. Remember, we only have one checking account here, so it's going to be broken out by the checking account by class. And the class did pull over, so it's going to be broken out by class. The class basically pulled over here, so that is nice. But we don't have 3 different checking accounts. It would be best to have 3 different checking accounts if you have 3 different businesses, but that would add a level of complexity because then you'd have to reconcile 3 different checking accounts. We're doing it with 1 here. Let's change the date up top to 02/15/21, 02/15/21, and then we're going to go ahead and save it. Let's save it. Let's close it. And I'm going to say yes, and I'm going to say yes. And then we're going to go back up to the balance sheet, and the undeposited funds has disappeared because it's back down to 0. And then in the B1 column, if I double click on the checking account, we now have the deposit of that $5,500 on 2/15. Let's do it again. I'm closing this back out. Let's go back to the home. And let's say now that let's pretend that we're getting deposits, and I'm going to record each transaction into the bank as I make the sale. So I'm not going to be grouping them, and therefore I don't need this added step of recording it to the deposit here. I'm just going to put it, group my sales items up top. So I'm going to call this is going to be B. This is going to be B. Let's hit the drop down. Let's do drop down B2 this time. B2. And this time I'm going to put it directly into the checking account, right into the checking account. And then this is going to be as of 02/17/21. And then I need an item for B2. So I'm going to say item number 3, which is our B2 item. And let's say this is for 3,200. So this is going to then be increasing right into the checking account this time. And the other side is going to be going to sales. And I want to assign a class. Now, if I don't assign a class, then I'll be able to see it. The class isn't being assigned by default because this item here isn't given the information needed, meaning we assigned the default to be assigned by account, and it can't really see the account because it's being driven by the item here. So we would have to manually assign the class. But what if we didn't? What if we didn't assign it? If I said save it and close it, it's going to say it's 30 days old, and then it gives us the warning, 1 or more items have not been assigned a class. So it'll give you a warning. Even if I ignore that, I say, I'm just going to ignore that because it's a stupid thing. And then I go back to the profit and loss, then it'll be an unclassified. See, it's an unclassified. And because we broke out these 3 different accounts, we have this double check. So I know that's an unclassified. If I assigned it to the right account, the B2 sales account, then I could just double click on it and reassign it. So I'm going to say, all right, this one didn't get assigned. Probably somebody else input it, because if I input it, it would have gone to the right. But in any case, I'm going to hit the B2 there, and then we're going to say save it and close it, and then save, and then it'll be now recorded in B2. B2 sales have now been recorded. Other sides in the checking account. So checking account B2, that's on the balance sheet. Checking account B2, checking account B2. So there we have that. So I'm going to close this back out. Now, if I go back to the home page, you could end up with a situation where you have, if you're collecting cash on 2 different businesses, then you want to make sure that you deposit them separately. So for example, you might end up with a situation where and this would only happen if you're doing sales, both your businesses have these sales receipts that you're collecting money on and putting it through undeposited funds. So again, if your other business is gig work, or if your other business is going through accounts receivable, this may not be as much an issue. But let's say that we had B1 sale happened here, and this is going to be for the class of B1, and this happened on 02/19/21, And then I've got a B1 item, and let's say this is for 8,750. And then I'm going to say save it and new it. And we're going to put this into the undeposited funds. And then I'll say save and new and OK. And then let's say I have another one, which is B2, and this is going to be B2 undeposited funds. And this is going to be B2. And let's say this is for 383 or 821. 3821. That's what it's for. 3821. And then I'm going to do the same thing. I'm going to say save it and close it. Save it and close it. And then if I go to the balance sheet now, I've got these two items in the undeposited funds. Here they are. They're broken out separately here. And then if I go to the income statement, I've got the two items that we recorded on sales. So that's going to be B1, the item here, and then B2, the item here. Okay, so I'm going to close this back out. Now, if I go back to the balance sheet, now I've got these two amounts in undeposited funds. And I want to be careful when I deposit them that I should group them separately by each business. In other words, like if I have cash from the two businesses and I'm going over to the bank and I'm going to deposit this into the bank and I have one checking account, then the temptation is to deposit one, lump sum. But if we want to line up our cash flow with the business, we would want to break out our deposits by company. So usually that probably isn't a problem because you just naturally do that. But if you have two businesses where you're collecting money on and you go into the bank at the end of the day, then you probably want to deposit them separately would be best so that you can kind of have your flow in the checking account. Even though you have one checking account, it'll kind of flow between the two. So in other words, if I go back to the home page, I've got two items to record the deposit with. If I go into the deposit, then I could deposit them both at the same time, which would be correct if I went to the bank and I deposited them into the bank with one lump sum deposit. But if I did that, then I won't be able to assign the proper class because these two are going to different classes, so it wouldn't work, right? So I got to group up my deposits per business when I put them into the bank, even though I'm working here with one checking account. So I have to do these, in other words, one at a time. So I'd say one at a time. This one's going to be B1, and then I'm going to save it and new it. Save it and new it. And then this one I'm going to do one at a time. I'm not going to put them together, and I'm going to save it and new it. And there we have it. So then so now I can assign the proper class more easily there. So I'm going to say save it, save and new. Or save and close. I should have closed it. And now it's possible that you could possibly group them into different classes in the deposit screen, but I think that's the easiest way to do it. I would record two separate deposits, and then you'd go up to the balance sheet, and now the undeposited funds is gone, and it has been recorded into the checking account here, recorded into the checking account there. So that's going to be the sales receipt. So if I go back to the home page, so we've now kind of thought about the three major ways you could do the revenue cycle. One, you depend on the checking account completely. Something like gig work, you just build your books from the checking account. If you're not going through accounts receivable and you're not collecting like revenue at a cash register, that for many businesses, that could be fine. That could be a way to go. Two, you actually create the invoice and you have to then collect on the invoice, make the deposit. Or three, you basically work at something like a cash register where you're getting the payment at the point in time you're doing the work and then depositing it into the bank in some way, shape, or form, which is still a cash basis method, but one in which you're not dependent on the bank. You're entering the data first. And then you, of course, have combinations if you're talking about two businesses on what the style is of those two businesses, right? If you have one that's gig work, and then that should be the easiest way to do it because you can depend on the bank, then it would be easier to do the other two because then your customer lists won't be as hard to manage in one file because there'll be one customer list. Or you might have any combination of those three. Those are the basic three ways that you might set up how to account for the revenue cycle.